Unlike services you receive from the National Health Service, which are mostly free, the law requires people who receive social care services arranged or provided for by their local council to pay towards their support. Financial assessment is simply a way that we look at your finances to see how much you can afford to pay towards the cost of your social care. This also helps us to work out how much the council will contribute to your support. The amount you pay could depend on a lot of things like, for instance, how much savings you have, what other assets you have, such as any property, what money you have coming in, such as welfare benefits, occupational pensions, annuity payments, and what things you have to pay out for, such as ongoing home costs, rent or mortgage for example, and extra costs you have because of disability. Max, the retired gentleman's story. Max is an elderly gentleman who retired 5 years ago and has been living on his small state pension and is using his savings to help pay his rent. His current financial situation is as follows. Income, state retirement pension, £150.50, total £150.50 per week. Capital, savings of £17,550. Expenses, rent £100 per week, council tax £15 per week. He is going to receive a care package costing £50 per week and therefore needs a financial assessment. Assessment process and Max's capital. A visiting officer from the council's financial assessments and benefits team asks to see Max at a time that suits him to discuss his finances. The first thing that will be checked at the visit is the total of Max's assets, also known as capital. If Max has less than £14,250 in assets, then these are not counted when calculating his share of the cost of his care package. If the total value of Max's assets is more than £23,250, then he will be required to pay the full cost of their care. If the value of Max's assets is somewhere between £14,250 and £23,250, then a figure is calculated to convert it into an income amount. In other words, how much income is assumed to be generated if the capital was invested. This conversion is based on rules set by the government that assumes £1 of income is generated for every £250 worth of capital held, or part of. The resulting figure is added into the assessment. This converted figure is called tariff income and is calculated by deducting £14,250 from the total asset value and dividing the result by £250. This amount is then rounded up to the next whole pound. In Max's case, his total assets are £17,550, which results in a tariff income of £14 per week. £17,550 less £14,250 equals £3,300, divided by 250 equals £13.20, so £14 when rounded up. This amount is then added to any other income Max earns, after which an amount for normal living expenses is deducted. This is known as an income disregard and is the amount the government says a person must be left with to live on. In other words, the council must ignore or disregard this amount when assessing what someone can afford to pay for their care. The income disregard amount depends on a person's age and whether they are part of a couple. In Max's case, the income disregard is £189. Housing costs such as rent are then deducted, and whatever amount is left is the amount a person is expected to pay towards their care. Assessment results. Max is assessed as not having to pay for his care. However, the visiting officer has completed a benefit check and advised Max to claim pension credit and attendance allowance. He also advised Max that once the pension credit was awarded, he would also be entitled to housing benefit and council tax reduction. Awarded from assessment results. Once the benefits are awarded, Max lets the financial assessments team know and a new financial assessment is completed to take account of his changed financial circumstances. There are two components for pension credit: savings credit and guaranteed credit. For financial assessment purposes, savings credit is not taken into account. This results in Max still being able to contribute towards his care and being better off than he was at the start. At the initial visit, Max mentioned that he has to pay for chiropody and showed the visiting officer a receipt. As Max is now in receipt of a disability benefit attendance allowance, this expense can also be allowed for. The account Max pays for his chiropody works out at £3.50 a week. His contribution towards his care is now £32.45. When Max notified the financial assessments team of his new benefits, he was advised to contact the pension credit department again to tell them that he is now receiving attendance allowance and lives alone with no one claiming carer's allowance to look after him. This resulted in his pension credit increasing. Once the increase is in place, Max notifies the financial assessments team at the council and another assessment is completed to reflect this new change in his financial circumstances. This results in a calculation that says Max can now afford to pay £98.30 towards his care. As his care is less than this amount, he will only pay for the cost of the support he is actually receiving. His new charge will therefore be £50 per week, which is the total cost of his care. Max is now getting all the benefits that he is entitled to, so the financial assessments team set a review date for the financial assessment and will recalculate the figure he pays every April when Max's welfare benefits are increased.